Yeah, welcome back to this new to another the part two of module two of the Malaysian SNR. Now, in the first in the first in the previous module, which is the part one, we talk about the review. Just want to do review. We talk about the open close, the open close connection, which is responsible for the market equilibrium, then where the market will likely go to take this thing from, go to take the action from. The open close, we made mention of how price will tap into it, withdraws back. At each level of resistance, price tap into it and withdraws back. If it breaks through it, it's going to go up higher. But if it withdraws back and close below that resistance, it's coming lower. Then if you tap into the level of support and withdraws back upward to close higher above that level, that means price is going to bounce and continue in the upward direction. So we talk about how to mark the levels, the SNR. You say when you are marking this resistance, your focus is on what is on the candle, the first candle, which is the bullish candlestick close. You focus on that, which is the A shape of the line chart. You locate it from the line chart first. It's easy to locate there. But if you can still draw it, if you can still mark it out on candlestick, just make sure that you tap the close level. You draw it draw it forward, because you are going to make use of it in the subsequent price action. So this is for support. You focus on the first candlestick by the left. You draw from the close of this bearish candlestick, draw it across the opening of the new bullish candlestick forward. Then you mark it like that. So that's how to mark your stop, how to mark your support and resistance level. Yeah, please focus on the body, not the wick. That was the conventional way of drawing the DC. The wick. So we made mention of type of SNR in the first episode part of this module 2 course. It made mention of types of about 4 types of SNR. The regular type, which is the classic. This is the classic. Price tap into it, then withdraws back. Then this is support. Price tap into it with a wick, then withdraws back upward. So whenever price break through it, it becomes what we call a breakout SNR. If price break through the resistance level, it becomes a new support. So whenever you see a price tap into this place, withdraws back upward, it has created a kind of the opportunity to buy into that rejection. So then move higher with it. If it breaks through the support level, then we are looking for price to retap back into that place of broken support. So this broken support now become a new resistance for sell. So, but you must wait here for what? For a price rejection downward. So price, want to see price to tap into this place and close that. Then we have the HNS, SNR, which is the QML or HNS. So if we have it like this, that is QML. QML is a bit different from HMS. For HNS, which is head and shoulder pattern, the parts of the shoulders are equal part. But for QML, it's not symmetrical. It doesn't need to be equal. And again, the neckline can be broken so long and like this. To go higher, then tap back into this place. The third point, which is the left shoulder, when price tap back here to make a left shoulder, that's where we're going to buy into. Here we are going to sell into this right shoulder here. So that is for types of DC. Then we have we made mention of the open close, which is the gap level. So when you see two candles moving upward, two bullish candles moving up, and they create this gap. There's a gap between this open and close. Sorry, there's a gap between the close of the previous candle to the open of the new one. That's created what we call a gap level here, right? You draw forward. There's a wick here. That means it's a kind of a what? It's a kind of a pullback. It's a kind of pullback, which price will come back to tap into. It has created what we call a kind of a zone here, right? But it's hidden. It's not usually hidden in a. We'll talk more about that in the subsequent this edition of this. We'll talk more about that in a hidden. How to see that in a lower time frame? What is hidden in a higher time frame? We call it a hidden SNR. Can call it hidden SNR or a gap SNR or open and close. So this for sell. Price start back into this open gap. So this is the close of the previous candle. This is the open one. So this place creates a what we call gap. So price will come back to refill it, to refill the gap. You know, every gap must be filled up. So price will usually come back to refill it. So we are going to sell into the retest of that. Then we talk about how can you identify it in the chart. How can you identify that in the chart? So we made mention of that, and we made mention of that, so that we go to the next topic, which is so we're going to delete. Let's delete. Let this go. So we talk about this. Then we do not talk about the fresh and fresh level. Fresh and fresh level. Fresh and fresh level. What is the fresh level? What is fresh level and fresh level? Fresh level means an SNR that has not been tapped. A fresh level means an SNR that has not been rejected. Has not been rejected. If you have this as your SNR level, right? We have this as SNR level. If you have that as an SNR level, probably this is this is a support level, right? And price come into it and taps into the level with a wick. Price wicked it out. It wicks it out with a close above it. So this player has become what? It's become a broken, sorry, and not fresh. It's no longer fresh because it has been, liquidity has been taken out of that level. So it become on fresh. But for it to come with a, if we don't have anything that has tapped into it, it's still yet a fresh level. It's yet a fresh level. It's a fresh level. Support. So if we have a breakout like this with a body, where candlestick break through it with a body, not a wick, is still considered as a fresh. It's considered as a fresh, right? Because it has turned to what here? It has turned to resistance here. Price will come back to it. We tap back into it. Price will tap back into it. Yeah, price will tap back and come down. So this is a fresh level. This is a fresh level. We call it fresh. Fresh support can be fresh support of SNR. Fresh SNR or fresh support. So that make it fresh. If again we have a wick that follows through here. Other top like this, it becomes what? It become an unfresh level again. Then if we have another candlestick that later came to with the body to break through it, it become fresh. Become fresh. So now the opposite is what we have for the resistance level. So this is fresh SNR. Fresh SNR. Fresh SNR. Then we are looking for price to do what? For price to tap into it and withdraws back, right? We are looking for price to tap to it and withdraw back. But in a situation where we have something like this, that price broke through it and above, and close above it, that makes it to be a fresh what? A fresh SNR. So we're looking for price to tap back into it and then take high. But if price come back again and end up with a week that tap into it, it become what? Unfresh. Become unfresh. So you can you cannot differentiate between fresh and unfresh level. Fresh is an SNR level that is not being tapped by a week. Not being tapped by a week. If it is tapped by the body, it's still fresh. If it's tapped by the week, that means it's an unfresh level. It's an unfresh level. It's an unfresh level. Something like this. If you have a week like this, a week. So this play become what? It becomes unfresh. It's no longer fresh because liquidity has been taken off the level. But when you have another, this is like that broke through like this, it become what? It become fresh. So you are going to look into it again later on as a fresh level. We are going to look into it later on as a fresh because price is still coming to take liquidity out of it here. Right? Yeah. So that is logic. So fresh and a fresh level. We are going to make use of that in our DC. Yeah. So let's expand this and see how it is in the charts. Let's see this how it is in the chart. This is a fresh level. This is a fresh level. This is a fresh level. Being tapped into. Then the body closes below it. It's a fresh level. So we are looking at it again. When price comes into it, becomes what? If price tap into it with a week, it becomes what? It becomes fresh. This is on fresh level. It has been tapped into, right? Liquidity that is taken out of this place, it becomes fresh. But when body closes above it, it becomes fresh again. Become fresh again. So all these places are on fresh level because price has tapped into them. Yeah, they are on fresh level. This place is on fresh level. Price has tapped into it. This place is a fresh because it was taken out by, I think, by candles. Okay, close below it. So any moment that candles close, we have a close below it. That's a fresh level. But if it is a week, that's on fresh. Now, for example, this place is on fresh level. It's on fresh level. But want to load something, even if it is on fresh level, it can still be used again, as long as it has not been used more than 3 times. Not that it cannot be tapped into. We don't have multiple, like for example, this place now. This place, it is a fresh. I'm looking at a new. Okay, like this place now. Can you see this place? Starting from here, press tap into it, become fresh, tap into it, become unfresh. I mean, this place unfresh, become unfresh. This place for here, it become unfresh. Here, it become another unfresh, then fresh back. Price tap into break through it because it has become so weakened. So price finally break through it, we draw back into it. So it become fresh here, become fresh here. So price finally look back, break into it again, and the same thing happened there. The same thing we see here. Price break into that place. Can you see many times? It has been touched many times. But price still make use of it in the subsequent action. Can you see that? Because of what? Because of congestion here. It has been tapped so many times. So note that. So here it becomes fresh. This fresh. Tap into it, become a fresh, become fresh. Price tap into it back again. So we do that on our this is when we are doing our storyline. We talk more about that. So that's that of the level fresh and fresh. Then let's go to the next important this which is SNR plus touch. Touch is what? Is when a price tap into a level. When a price tap into a level. Like this place, this is a touch. This is a touch, right? Price it taps into this level. Take out liquidity, right? It close below it. This is a touch. So the first touch must be weak if you are to trade it. Don't trade until when you get a wick that touches the level. Yeah, you want to see something like this. Want to see something like this. Let me. You want to see something like this. This is the level of editing, right? If you see something like this, if you see something like this, that's a valid touch. That's a valid touch. So that's a valid touch. You want to buy into this place now. That's a valid touch. This is a touch, right? Because it comes with a rejection. Price break through it, but withdraws back upward. So this God give us a wick. So when you see a wick, the level of support or resistance, that's a good touch. It's a valid touch to trade. You don't trade it until when it has closed. Because sometimes it could still end up to become a body, a breakout. So that when you are not selling, when you are buying, it will not go and take you out. So you don't trade against the market maker. You trade with them in their manipulation game. You trade with them. So the first touch must be weak. The first touch must be weak. If you are going to sell lower here now, the first touch must be what? Must be weak. The second one could be body. The rest one could be body. But the first touch must be weak. That is the rule. That is the rule. You must touch it with a weak. Even if it is just, at least there must be a close above it. It must be close above it. Even if it is just 5 pips or thereabout above that level of SNR. First touch must be. So we want to see this as a weak. So that is the condition. That's the condition. first touch must be weak. First touch must be weak. See, this is a breakout. This is a breakout of this and price come back into it, then it's a weak. Then you sell it to this place. You sell it to it. Then here, this is a gap level. Price break out of it, a retest with a weak gives you a valid buy position, a valid buy trade. So touch that a weak validates, it validates an SNR level. That is the purpose. That is the purpose of that week. It validates your trade position at the SNR level. You validate your trade position. Yeah. I told you that the first touch of an SNR must be weak. It could be a single candle touch, or it could be a single candle touch. Or there's a miss before the touch. You come into that miss. Yeah. So this is the first touch. Is body. This is a invalid touch. You don't trade this. You don't trade. You want to see this before you trade, before you sell it to it. You don't sell it to it. It's risky. But the rules is that it must come with a what a price with a rejection candle. This is a rejection candle. It must close below it with a wick. Yes, yeah, not with body. Body must not touch it. That level. But we don't want to see low volume off that level. Yeah. This is a weak. This is a weak. A valid touch. A valid touch. So any moment you see a price rejection at the higher time frame, the SNR level, you may not need to wait for close, just go to lower time frame and identify a breakout to enter a position. What we mean there by there is that whenever you see this here, if this is a weekly SNR, if this is a weekly SNR, weekly or daily SNR, if this is a weekly or daily SNR, and you now come to, you see this rejection like this, right? You see a rejection like this, that means you don't even need to wait for this thing before you don't even need to wait for, you don't need to wait for a close before, because that's a higher time, a very higher time frame rejection. Before you sell, right? So you want to see a breakout, something like this, in a lower time frame. You want to see something like this, so you can sell it to that. You can sell it to, you want to see something like this. Price must come back into this level. Want to see something like this, right? This is a lower time frame breakout. Lower time frame breakouts. So this is a weekly rejection. A weekly rejection. That is a lower time frame. It could be 4 hours, it could be 1 hour, according to your own this. But if it is weekly, that means you are not going to use like 5 minutes because of what the distance is too much. Rather use 4 hours. But if you want to be kind of intraday trader or thereabouts, so that you don't have much equity to accommodate the DC, you can do 4 hours setup. If you see 4 hours and you see a rejection like this for 4 hours, that means you're going to go to like 30 minutes, 15 minutes to enter to see a breakout like this in this structure here at the level of this thing here, the level of rejection here, to see a breakout and trade it to it. So that's what you get to how to enter your trade. Then the next one, we talk about the SNR and miss. SNR and miss. What is miss? What is miss? Miss is simply a candlestick that fails to touch a level of SNR. A candlestick that fails to touch a level of an SNR is called a miss, a miss, a miss, a miss, a miss, a miss. MISS, a miss. Yeah. So if a candle does not have a miss, we call it a single candle breakout or touch. So a miss is, according to Malaysian trader, is when an SNR forms and price moves away, but the following candle weeks fail to touch the level. That's a miss. Fail to touch this level here. When price come, this is an SNR, right? Price come in, reverses down, pull back. It does not touch this level. When we have a gap between here and this first touch here, the gap, that's what we call miss. So it's valid. It makes that place to become potential when price tap into it. Like this place now, this is a miss here. This is a miss. This is a miss, right? So we see it could be a gap. It could be flipped SNR. So between the as an SNR level and the touch, if you get a space, yeah, like here, this is a miss, this is a miss. So we're going to have all these candles are what we call the miss candle because they do not touch, they do not go up to touch, they didn't go up to touch the SNR level. Yeah, there's a miss here, it's a miss here, this candlestick here. As long as we have at least one candle in between the level and the touch. So there's a miss there. A miss there. Yeah, there's a miss here. This is a miss. It's a miss. Then finally we talk about so those are the area, those are the points that make a touch to be more significant, to make your trade the checklist you must employ when looking for a touch of an SNR. You must look for the gap between here. There must be a gap if you want to take protect. If you still want to take a single DC, like for example, this is a single, there's a gap there, right? For example, this is a single candle breakout, a single candle touch. Price still comes down, right? We will tell you what you need to do. But that is a SNR and what and SNR and plus liquidity sweep. This is a fantastic one. Got it from SMC. Yeah, liquidity sweep. What is liquidity sweep? Liquidity sweep is simply liquidity sweep is simply the taking off of a previous high and low. Yeah, that's liquidity sweep. So if you come here, this is an SNR, right? And price tap into it. Then look at it. The price that tap into it, does it take out a previous high? If you take out the previous high at the level of that SNR, it becomes what? It becomes a liquidity sweep. It must carry this. It must carry to become more potential. It must carry this. Once it carry this, that means there's a tendency for price to do what? To go lower, right? It's for tendency. This too is another sweep of liquidity of this level. But the one closer to it, the one you are looking at as a touch, also must carry a liquidity sweep, must grab liquidity of the previous candle. Must grab it. So you look at so many examples, must grab it. It could be a distance of 3 candlesticks, it could be the next candlestick to it. Doesn't really matter. As long as you grab liquidity before you see that rejection, you grab liquidity. That shows that that is a strong rejection. That liquidity has been taken out of this place. It's just like when we talk about the inducement in our SMC course. Yeah, you can employ the this here to fine tune the area of your touch level, so that when you buy and sell, it gives you more confidence. You know, it increases the odds of winning your trade. You can see all this miss here. You can see price coming down. See miss, price coming down. Let's go to that live chart and see it yourself. See it yourself. See it. See, if this is a daily this, right? And we got this as what as our SNR, right? Even before here, we have a sweep here, right? But this price has not tapped into this level. But next one, we have this. We have a price tap into it. It's a sweep. Can you see that sweep? Price tap into it here. Can you see the sweep? It sweep up the previous candle high, right? So all these listings that are available here were swept off. Then at the level of what? At the level of SNR. Yeah, at the level of an SNR, sweep that place off. That is the thing. Then another point, you can imagine the this thing that follows. You can imagine the this thing that follows. Can you see that? So it's sweep liquidity. Then if you talk of this place too, see here, we have another one here. Can you see this place? So it's a single, it doesn't have a miss, right? But this place make it more potential for us to overlook the no miss touch, because he grabbed liquidity here. And you see, he grabbed liquidity. This is an SNR. He grabbed the last liquidity here off the candlestick, the SNR candlestick. He grabbed liquidity there. So what do? We tap into it and trade higher. For example, this place now, this place, can you see this place? It's an potential. It's an potential stuff. Can you see it? It does not grab liquidity. Though this one grab it. This one grab it, but it doesn't have a miss. But the particular one we are looking at, that it touches it somehow with a weak, does not grab liquidity, right? And what happens? So this one will tap into it, grab liquidity, and well, there was a miss. There was a miss. So this one has become more stronger than this. And imagine the move. See this? He grabbed liquidity because there was a fresh level of this here. A gap, fresh level. You see it? And he grabbed liquidity here. You can imagine this how many pips there. If you have bought into this, you can imagine the this there. That's almost about 128, 329 pips. 329 pips. See the another powerful this thing here. So you see the importance of liquidity sweep of a particular level. This is a fresh, become fresh here. Then you grab liquidity, it comes down. And imagine the big move. This one grab liquidity here, tap into this, to the body. You grab liquidity and go. Then you tap into this back again with liquidity sweep. Now you see the sweep? See the big move. So powerful. So powerful. Very, very powerful. Grab liquidity, then sweep away the resistance level. So that is the importance of this thing. Then another factor that can still make I'm giving you about 3, but if you look at the touch, that will make your level to be potential, to be more, I mean, to be high probability of winning. You look at the touch, that's with weak. You want to see weak. You want to see a miss. Then you want to see liquidity sweep. Then the fourth one we want to see is congestion of many SNR at the same place. If you have SNR at the same place and price tap into it, like 4 to 5, at the same place, and price tap into it, you can imagine the distance of that place it will become. If you have multi-time frame SNR, you can have 1 hour, 30 minutes SNR weekly. They converge at the same line and price tap into it. It increases the odds of your worth. It made that place to become a strong level. It makes it to become a strong level. Makes it to become a strong level. Make it to become a strong level. Make it to become a strong level of SNR. So we should look at and get another, like somewhere here now. Just get located at least one or one. So that is for the, we come to the end of this stuff. So next we'll go into how to build your storyline.